Hey guys, it's James and I'm back with another valuation video. Today I'm doing Hormel Foods, or ticker symbol HRL. We're going to try to determine put a value on Hormel using the discounted cash flow model, Graham's model, and the dividend discount model. Take the valuation of the three and average the three together. Apply a margin of safety. Find out what our final valuation is, and then compare that to the current price. The current PE ratio for Hormel Foods is about 25, which isn't fairly high, or isn't too much higher than the S&P 500 average, where we have seen and evaluated some stocks in this series up to the 30 to 40 PE ratio. The current dividend yield for Hormel Foods is 2.41%, and the dividend payout is about $1.10 annually. Right here we have a chart of the 10-year annual free cash flow, and we do see that Hormel Foods is doing fairly decent. This red line, or the slope, is about 9% growth on average per year, where we had some pretty good years in 2015, 16, and 2018, where 2019, 20, and 21 have dropped slightly, but the overall 10-year average is up fairly high. The 2-year average, or the 2-year price chart, it does look fairly flat. We do have a pretty decent spike here in the middle of the past 2 years, and year to date, January, right about here, it has been fairly flat for the year of 2022. And in the red, yellow, and white, we do have just a benchmark of the 20-day moving average, 50-day moving average, and 100-day moving average. So what is Hormel Foods? Well, what type of foods do you think of when you see Hormel Foods? Well, over on their brands page, you scroll down, you might see some brands that you recognize. Probably two of the most recognizable brands are Skippy, or Skippy's Peanut Butter, and Spam. So let's run the DCF model for Hormel Foods and see what we get. To run the DCF model, we need the at least 10 years of free cash flow. We put in a perpetual growth rate of about 1%, dividend, or the discount rate of about 8%, and we have to find the total cash and total debt. If you guys want to follow along with this evaluation, or you want to do another evaluation with your own ticker symbol, I do offer these spreadsheets over on Patreon for fairly cheap. We do also offer a future value workbook where you can predict the future value of your portfolio by putting in various averages. And we also are working with our dividend portfolio tracker currently using the valuation tab, using the dividend discount model, Graham's model, and discounted cash flow model. And then we do also offer a small little budget tracker as well, so you get all three workbooks when you sign up for Patreon. So the discounted cash flow model, where did we get these numbers? Over on Y charts for Hormel Foods, went ahead and added up the quarterly free cash flows each year for about 10 years, and here is what we get. We get about a 8.97% average growth rate per year for a 10-year running period for the free cash flows. The total cash and total debt, where did we get that? Well, coming over to Seeking Alpha, and I do have the premium subscription for Seeking Alpha, so you might see a few more stats compared to the free version. Coming down here, the cash and total debt numbers can be found right here. Total debt is 3.38 billion. Total cash is almost close to 1 billion. If you guys want a Seeking Alpha premium subscription for very cheap, currently Seeking Alpha has allowed me to give you a discount. For the first year, you could only pay $39 for the first year of Seeking Alpha Premium. Normally, Seeking Alpha Premium, I can get it to you for about $99. The total no discount is around $239. But if you sign up before January 3rd, 2023, you can, with the link in the description of this video and some of my other videos, you can get Seeking Alpha Premium for only $39. Now back to the valuation for Hormel Foods. Once we put in our cash and debt numbers, we have now all the things in the spreadsheet to be able to calculate a valuation for the discounted cash flow model. For Graham's model, all you need is the growth rate and the AAA corporate bond rate. Graham's model, most of the things you need are already put into the formula pulled from Google Finances information. So the growth rate, where are we getting the growth rate for Hormel Foods? Over on Yahoo's page for Hormel Foods, over on the analysis tab, all the way down for the next 5 years expected growth estimates per year, about 5.5% per year for Hormel Foods. So put that in the calculator and we get 5.5% growth rate. AAA corporate bond rate is, you can just do a quick Google and it comes out to be about 4.24% for the day. Coming down to the dividend discount model, first off, we're going to find the dividend payout and the 5-year dividend growth over on Seeking Alpha. On their dividends, annual payout $1.10, 5-year growth rate 8.87. Now when you have a 5-year growth rate for the dividend discount model that is higher than about, say, 4 or 5%, sometimes it can give you a negative. So you do have to try to understand what the dividend discount model is saying. It is saying if you put this 3% in here, it's saying that you are going to continue, or if actually it was 8.87%, the dividend discount model is saying that Hormel Foods is going to be continuing to grow their dividend at 8.87% for an extended period of time, which is not possible. So if we bring this down to a more realistic dividend growth of about 3%, and it's not going to give us a negative. And then the 10-year bond yield, you can find a quick Google of 3.48% for the risk-free rate, and then the return of the market anywhere from 8 to 12%. Coming over here, margin of safety, we'll apply a 25% margin of safety. We'll go ahead and evaluate, and we are getting a buy signal for Hormel Foods. So the discounted cash flow model gave us a valuation of $124.57 compared to $45 for Hormel Foods. Graham's model gave us $23.61, and the dividend discount model gave us $91.42, with an average valuation of about $80. With a 25% margin of safety, the final valuation comes out to be about $60, which gives us a buy signal for Hormel Foods. So if you feel comfortable with Hormel Foods with a fairly decent dividend growth rate, if you do recall, 8.87% for a 5-year average growth rate, dividend growth of about 20 years running, payout ratio of about 56%, fairly average, a little bit, maybe a little bit more on the lower end of a dividend yield. If you feel comfortable with all of this valuation and the stats for Hormel Foods, go ahead, and I would say Hormel Foods would be a buy. But of course, do your own valuation and due diligence and apply a proper margin of safety. Don't forget to head down into the description, and there is a very steep discount for Seeking Alpha Premium. Head down to the comments, let me know what you thought of this video. If you want me to do another stock like this on this spreadsheet, let me know. And with that, thanks for watching.